module of your IFS exam. We will be discussing the marathon session for that today. Okay, and when we talk about the structure of this particular lecture, this particular session, it will revolve around two things. One, you have to be very clear when we talk about the number of questions. So questions will range in between 20 to 25, and we will be trying to inculcate all the important topics. All the important topics will be covered in this particular lecture, so stay tuned till the end. Let's get started. When we talk about the first question, it is in front of you, and it talks about the call or notice money market. An important chapter, I would say. Overall, it's an important chapter, the chapter which includes your call money market, term and notice market as well. So do let me know what will be the right answer here. Hi Naresh, hello. Take some time, take approximately, I would say, 10 to 15 seconds, and do let me know what will be the right answer. I want reply from all of you who are watching it live, and if you are watching this as a recorded format, then I would highly recommend that do tell me all the answers in the comment section. Yes, it just started. This is the first question. Fine, quickly, I want reply from everyone. The first question, it talks about what? Regulatory oversight by the RBI and the differing participation rules for your various entities in call or notice market. Which of the following scenarios is most likely to occur within this particular market? Hi Swati, Basha, hello. Okay, so Sunil Kumar has already answered as C. What about others? Others should also chip in and tell me the right answer. Okay, first statement is saying that a newly established RRB with temporary surplus funds actively borrowing call money from a large insurance company facing the short-term liquidity constraints. So do you think that newly established financial institution will be able to receive the particular benefit of this particular market, that is call or notice market? What do you think? A primary dealer with temporary shortage of funds or borrowing notice money on a collateral basis from a development finance institution, that is DFI, seeking to deploy its excess liquidity. Again, temporary shortage of fund of primary dealer is being asked here. Okay, you have to select the most likely scenario. Most likely, do remember this word, most likely, and in the exam you will find what? You have to select the most appropriate out of all. C, a scheduled commercial bank excluding the RRBs lending call money on an uncollateralized basis to another SCB experiencing a temporary mismatch in its CRR maintenance. So this is the basic function, the core function, or you can say the core objective of this particular money market. Next is the D, a select mutual fund having received significant overnight inflows lending notice money to PD looking to cover its underwriting commitments for a government securities auction. Whether this is included? No, it is not there at all. C will be the right answer for this particular question. Yes, for your convenience I have listed all the important points as the explanation. Why the statement is correct? Because the statement states that SCBs can operate as both the lenders as well as borrowers. Very important to know from this particular question, that when we talk about the call money market, notice money market, we are talking about SCBs, and under SCBs we are telling that they are the lenders as well as they can be the borrowers as well. Which particular SCB is excluded from this particular setup? Which particular SCB? Anybody? When we talk about this setup, which particular SCB is not included? Do let me know. Okay, so C is the right answer. Next question. Okay, Swati, Naresh, then we have Sulochana, Basha, Geetak, G Saraswati, Amita Prasad. Good. Everyone is saying C. That is good to know. Okay. Next, we have the applicant to become a tri-party agent should have a minimum paid up equity share capital of dash. What is the equity share under the paid up capital? It will be RRBs. Okay, good. RRBs. Swati is saying RRBs. You must remember small things, but they help you to eliminate the options. If there is a tricky option in the exam, if you remember such things, such small things, you'll be able to answer the tricky questions as well. Tri-party agent, minimum paid up equity capital. It will be option A, 5 CR. Everyone is saying 5 CR, but what will be the right answer? The exact right answer. Minimum paid up equity share capital, whether it will be C or A. In the eligibility criteria, the applicant should have a minimum paid up equity share capital of 25 CR. Right? It should be 25 CR. Na? 5 CR by minimum paid up capital. I think there's a gap. The question is asking you for the minimum paid up equity share capital. Do mark the keyword here. In the eligibility criteria of tri-party agents. Fine. Okay. Here you can see for yourself, the applicant should have the minimum paid up capital, minimum paid up equity share capital of rupees 25 crore, and the applicant should have the past experience of at least 5 years in the fiscal sector or the financial sector. Okay. When we talk about the eligibility criteria of tri-party agent, it is very important, fine, for the examination also, but as such for you guys, because you are the bankers, you must know the eligibility criteria. The scheduled commercial banks, recognized stock exchanges, clearing corporation, the CCIL of stock exchanges, clearing corporations. Then we have authorized under, these are authorized under the payment and settlement system to be eligible as the TPS, the tri-party agents. Fine. Since SCBs are also one of the part of your TPS, so you must remember that. Minimum paid up equity share capital of rupees 25 crore, 25 CR. Fine. Next question. Okay, take some time, 5 seconds, max to max 5 seconds, I would say. A very simple question. This is a very simple question. Correct regarding the term money market. Regarding the term money market. In the term money market, whether the funds are there in the collateralized form or uncollateralized funds are being accepted. What do you think? Uncollateralized or collateralized? Because this particular question has both. First of all, we should be very clear in our mind for the term money market, call, notice, whether it is uncollateralized or collateralized. So, the first text itself says that uncollateralized funds are there, and then the categorization will begin. In the book also we have seen that when we talk about the term money market, it is for a time period of what? 14 days to 1 year or 7 days to 14 days. Short term funding is going on, but up to what? 1 year or up to 14 days? That's the question, or you can say that's the confusion often we have seen. So why it will be collateralized? Anybody? Vikram is saying collateralized. Anybody would like to differ from that? 14 days to 1 year, that's okay. Amita Prasad is saying 14 days to 1 year. But whether it will be collateralized or uncollateralized. A very simple concept. Don't get confused. I am here to confuse you, but don't get confused. Exceeding 14 and up to 1 year. So what will be the final answer? A or D? A or D? In the examination also you will find such situation wherein you are not sure or unsure about something, but you have to make a decision. Fine. These sessions will help you only when you are making those decisions which you are supposed to take in the examination as well. A will be the right answer. Good. Call notice term money is a market for trading very short term liquid financial assets that are readily converted into cash at low cost. Cash at low cost. Institution which has surplus funds may lend on an uncollateralized basis to an institution which is short of fund. Uncollateralized basis, the funding is happening here. Term money refers to the borrowing or lending of funds for a period exceeding 14 days up to 1 year. You must remember these simple, small things. Okay, don't ignore the basic definitions. Sometimes we know the SPVs, fine, special purpose vehicle, we know that chart, diagram, everything. But these type of questions you should not ignore. Such questions can cost you 1 mark. Fine. What about this one? Okay, what about this one? The import factor's role in international factoring is typically contingent upon a specific event related to the buyer's payment. Which factoring system triggers the important factors involvement only upon buyer default, only when the buyer is defaulting? Fine, that is also one of the keyword. International factoring is there. Okay, I agree with you. But the next keyword will be what? Seek the keywords. That's what I want to convey. Okay, fine. So indeed everybody is right here. Most of you have given the single factor system as the right answer. It is the right answer. Option A will be the right answer. Here for your reference, the chart is there, and we have seen that single factor system, and then you have what all components are there in that particular factor system. Question can be asked from that. Find the process, the flow, you must remember. Single factor system, in this type of factoring, import factor comes into focus only if buyer defaults in making the payments, only if the buyer will be defaulting. In such case, export factor, the export factor, this one, it will recover. This export factor, once the buyer has defaulted, the export factor recovers the amount from the import factor. Fine, from here it will be recovering. Fine, and it is then left to the import factor to recover the factored amount from the buyer. Okay, so basic flow you must remember, basic things you must remember, so that such questions, if they are being asked in the examination, you are in a position to answer them. See, this exam is not about answering all the questions. Let me be very clear with all of you. This exam is all about making those questions correct, ticking those questions correct, answering those questions correctly, which are very easy. Fine, first step would be answering all those questions which are very easy. Take the 40 marks out of those easy questions and then capitalize. Fine. Okay. What about this one? NAV of equity mutual funds and index or debt mutual funds are required to be rounded off to how many decimal places respectively? Okay, Geetak, I will be coming back to that question. Just try to solve this one in the meantime. NAV of equity mutual funds, rounded off basic, very, very basic question. It is 2-4 or 4-2. To ensure the uniformity, basically mutual funds have to round off the NAV, right? And what is the decimal place when we talk about the mutual funds? Equity mutual fund or any mutual fund, it is what? 4 decimal places. And when I talk about the next one, your equity, fine, index or debt mutual funds, the equity mutual funds, they will be rounded off by 2 places. Okay. So answer will be what? Option D. Simple, very, very simple. It is again a simple question. This one, see, in this question, read the statement again. The import factor's role in international factoring is typically contingent upon a specific event. Okay, there is one event that is of default to the buyer's payment. Which factoring system triggers the import factor's involvement upon the buyer defaulter? They are asking for the default. When the buyer has defaulted, which factor system will be, you will be triggering which factor system, or under which factor system it will fall? It is single factor system only, because clearly it is mentioned that when the buyer defaults, the money will be ultimately, you can say, provided by the import factor to the export factor, and the import factor will ultimately recover the money from the buyer. The 7th one, if 0.6 materializes, import factor recovers amount from the buyer. The last step of this whole cycle, entire cycle. Okay. Now one question based on the numerical, very simple numerical, not that fancy. You won't be requiring big bulky formulas. A simple question. The concept which you require to know is principle of indemnity. These question marks are nothing but the rupee symbol. Okay, I think the file is under read only mode. The symbol is representing the question mark. So the question says that Miss Priya owns a boutique that she established 2 years ago with an initial investment of rupees 20 lakh. So initial investment, or you can say the asset which we are talking about, is what? Pertaining to rupees 20 lakh. She purchased a standard fire insurance policy. The insurance policy sum insured is what? Sum insured is 15 lakh. Sum insured is rupees 15 lakh. And when I talk about the damage, recently a fire damaged her boutique, and the actual loss is rupees 18 lakh. Okay, you have to calculate what? According to the principle of indemnity, the maximum amount of compensation, maximum amount of compensation Miss Priya can expect from the insurance company is what? It will be what? Whether it will be 15 lakh or 20 lakh or 18 lakh, what will be the right answer? Right answer will be none of these. Fine. What is the exact number? I can see that Sunil Kumar has already told us 13.50 lakh. Then Lokesh has also the same number, 13.5. Good job, both of you. Nice. Okay, so D is the right answer here. Fine. How you can calculate this? Just follow the formula. Formula is very simple. Sum insured divided by the value of the asset, and you are multiplying with the loss. S by V multiply by L. What is sum insured? It is 15. Value of the asset is what? 20 lakh. And you are multiplying it with the losses, which were 18 lakh. You will get what? 13.50. Right? 13.50. That is the answer. Okay, it is not included in the what? question. No option is having 13.5 as the answer, na? So none of these will be the right answer. The maximum will be 13.5, na? They are asking the maximum amount. Okay, that's the maximum one. Okay, fine. Next, REIT. Now REIT, InvIT, these are also important. Sometimes we have seen multiple questions from these chapters. In a single shift only, we have seen multiple questions from these chapters. Okay, this is perhaps the simple one, fine. A simplest form of the question which you can expect from REIT. So which type of real estate investment trust is specifically required to invest a minimum of 24% of its asset in commercial properties like shopping malls? Shopping malls, commercial properties. We are talking about retail, right? Retail, retail. C is the right answer, as told by all of you, I think. Basha, Geetak, then we have Sulochana, Mukesh, Amita Prasad, Sri, and we have Tejaswini, Debosmita, everyone, Rishabh. Good. C is the right answer here. For your reference, I have included these points here. Do not ignore these points also. Chances are there that question can be asked from here as well, like office, to operate the office space, mortgage, REIT, estimated 10% of the investments are there. Do remember these percentages. 24% is for your retail, 10% is for mortgage, REIT. Apart from that also, apart from these three also, you have 4 more. So do revise the limits as well, and the purpose. Purpose is most important. Yes, Swati, Subhash, Moksha, Priyanka, Gandhi Mati and Koti MBA. Good, good. Rupa Srinivas, Sunil Kumar, Naresh. No. Swati has answered D. C is the right answer, na, for the last one, retail. Okay. What about this one? Insurance Ombudsman cannot take up a case in which of the following scenarios? Cannot take up case. Cannot take up case. Cannot. If we are talking about the various cases, let's see one by one. Complainant has made a representation to the concerned insurance company and the insurer has accepted. The insurer has accepted it. Now, will you go to the ombudsman? The complaint is made later than 1 year after the insurer has replied. Sorry. Complaint is made later than 1 year. 1 year has lapsed. Now the complaint is there. Will insurance ombudsman entertain or not? The same complaint is pending in a court. Already there is same complaint in the court. So will the ombudsman entertain any duplicacy or not? Simple. Even if you do not know about the concept of insurance ombudsman, only option, or you can say statement 2 might trouble you. Otherwise, though, the rest 2 options are in front of you. Very, very relatable, I would say. Okay, D will be the right answer. Within 1 year. Good, Vikram. Within 1 year. And Sunil has told us D, Naresh, and Rupa, Srinivas, Debosmita. Good. D is the right answer here. See, if you are having the compensation, the award compensation should not exceed rupees 30 lakh. That is also a relevant, you can say, number which we must remember. Here it is written, the complaint is not made later than 1 year. So 1 year has lapsed in our question. That is why you cannot apply. Okay, REITs, again, in the context of REITs, select the correct statement from the following. Investing in REITs is capital intensive as compared to the direct investment. Currently, there are only few REITs. REITs are regulated by SEBI and hence the chances of fraud are low. Within 1 year, 30 lakh increased to 50 lakh. Okay, for previous question you are telling, na? The compensation has been revised, okay, to 50 lakh. Yes, yes. In the book, it is written 30 lakh, this one, where it is, yes, rupees 30 lakh, but it has been revised to 50 lakh. That's what the participants are telling us. Yes, that is correct. This is from your book. Okay. Fine. For this question, what will be the right answer? It will be option what? A, B, C or D? It will be option B, because investing in REITs is not capital intensive as compared to the direct investment in your properties. Okay, so B will be the right answer. Yes, there are limited options. There are some disadvantages as there are limited options. But when we talk about the investment in REITs, it is not at all capital intensive. And when I talk about REITs, are they regulated by SEBI? So answer will be yes. Okay, again, REITs have a tax rate of dash for the interest income to non-residential unit holders. It will be what? 2%, 5%, 3% or 7%. A very simple question again. It is what? It is simple for those who have read this. Okay, otherwise so everything is tough. It will be option B, that is 5%. Okay, so you can see that the benefit from favorable tax norms is also there. No capital gains tax if units are held for more than 3 years and sold through stock exchanges, withholding the tax at 5% for the interest income for your non-residential unit holders. Do remember this fact, 5%. Okay. Yes, B is the right answer. Now, SPV question has been asked here, and you must know that what is the level of asset that SPVs can hold or not directly in the properties, whether they can invest or not, then what is the limit for the sponsors, whether they can hold 25% of the total units or not. All these things you must remember. Investment trusts to invest not less than how many percent of the total value complete in the completed and revenue generating projects. These things, small things, but you should remember all these facts. So indeed, REIT, the sponsor, to hold not less than 25%, that is correct, of the total units of your investment trust for at least 3 years from the date of listing. This is very important. The timeline, at least 3 years. You have listed today, till 3 years, you won't be performing the function. SPVs to hold not less than 80% of the assets directly in the properties and not invest in other SPVs directly into the properties. Investment trusts to hold controlling interest and not less than 50% equity share or your interest in the SPV, special purpose vehicles again. Investment trust to invest not less than 80% of the value in completed and revenue generating projects, not less than, fine. That means minimum limit is 80%, and D will be the right answer. All of the above is the correct answer for this particular question. Good everybody, I can see all of you, starting from Rupa Srinivas till Naresh, maximum of you have given D as the right answer. Okay, now let's talk about the infrastructure investment trust. Often we ignore this chapter, REITs and your InvITs, but